Well, let's talk about this and about the semi-space in general. Christina Partsinevelos joins me now with more. Hi, Christina.
Hi, Morgan. It's funny, when he said that, you did see the reaction in the chip sector. Many of the, the common names, NVIDIA, Broadcom, the SOX ETF, all falling today. There was one outlier, and that was Intel. Intel shares are actually positive today. That's because President Trump really brought up the point of building on U.S. soil. When you think about all the options to build on U.S. soil, there aren't many. There's TSMC in Arizona. There's a few other locations. You have Samsung, specifically more towards memory, Global Foundries, which is more lagging edge. And so for Intel, it would seem like that would be the obvious answer. The problem is Intel's foundry business, and Morgan, I know you know this because we talked about it in the 4 o'clock show, just has really been struggling. Their most recent earnings report, they posted a 10Q, and they said that if they do not get an external customer for their more advanced process they're working on called 14A, then they're willing to forego all of their production plans specifically for that line, that more advanced line. They also said they were willing to work with other foundries if they can't get that line off the ground. And then another report today, Reuters saying that there's issues with 18A and that there may not be as many chips made, on this advanced process. So that just goes to show the lack of confidence in this foundry business. So it's difficult to see how President Trump would say that it's going to be Intel coming to the rescue when Intel itself is struggling so much to build advanced chips on U.S. soil.
Yeah, I thought the move in Global Foundries after their earnings today, speaking of foundries in the U.S., was very interesting as well. Christina, how's this going to set us up for AMD earnings?
Yeah, there's one point I wanted to add to that in regards to the foundries, though. Intel, there is a rumor coming from Taiwanese outlets that, TSMC is being used as a middleman right now between Taiwan and U.S. negotiations. They're saying that TSMC could potentially have to take a 49% stake in Intel in order to get their tariffs lowered to 15%. Right now it's at 20%. So it's just interesting how they're using that as a chip in their negotiations. For AMD, to answer your question, which is what you wanted to know, AMD stock has really run up about 46% year to date, more than any other chip out there. So expectations are very high. Why are expectations high? Because investors believe that AMD can finally get a piece of that AI pie. There's the MI 300 series, more advanced 355X, that is moving forward. You have the China sales that are coming back into play now that they are able to ship with a license. You have these rack solutions. AMD acquired ZT Systems, and that's allowing them to provide an entire rack versus just the chip, and that allows them to better compete against NVIDIA. And then you also have the CPU gains against Intel. So there's many reasons for this bull thesis, but as we saw, Morgan, with so many other chip names, expectations are so high. Texas Instruments, onsemi, Lattice, the list continues that you really saw their stocks drop dramatically post-earnings when it just didn't hit that threshold of expectations.
Okay, we'll see what we get after the bell. I saw what you did there, too. Chip and negotiations.
Thank you.
Christina Partsinevelos.
As investors anticipated the results of advanced micro devices, a competitor of NVIDIA in the artificial intelligence chip market, NVIDIA's stock fell on Tuesday. At market closure, Supermicrocomputer is also expected to release another significant earnings report. According to statistics, investors will be looking for advanced micro devices to report a 27% growth in revenue to $7.4 billion, but a fall in second quarter adjusted earnings to 48 cents per share. Following the resumption of trade negotiations between the United States and China this week, NVIDIA's stock surged to its highest level ever, reaching 183.30. There were the makings of a deal with China, according to Treasury Secretary Scott Bessent. But on Friday, President Donald Trump signed an executive order increasing Canadian products tariffs from 25% to 35%, effective August 7th. NVIDIA's stock dropped 2.3%. Should I buy or sell NVIDIA right now? In other news, MarketWatch reported Thursday that the Chinese Cybersecurity Administration discovered that U.S. lawmakers had demanded local capabilities and tracking for advanced processors. According to Barron's, NVIDIA refuted the accusation. H100s, which can cost up to $40,000, are the foundation of the NVIDIA AI chip empire. Tech behemoths like Microsoft and Meta use it. However, startups and independent AI aspirants in India and the United Arab Emirates are increasingly turning to advanced micro devices as a result of supply bottlenecks and U.S. export restrictions that are stifling sales to China. AMD's open-source ROCm software and its less expensive MI300 processors are its secret sauce. Will the next AI revolution be sparked by AMD's open-source ROCm software, which has the potential to break NVIDIA's iron grip. With 192GB of memory, AMD's MI300X CPU is twice as powerful as NVIDIA's H100, making it ideal for creating large AI models. When compared to NVIDIA's expensive CPUs, the upcoming MI350X, which will retail for around $25,000. The UAE's ambitious Falcon AI project and Indian firms developing AI for doctors or farmers can make more money. Data centers in hot Dubai benefit from AMD's CPUs since they also save power. AMD's US-focused initiative keeps it agile, creating opportunities for resourceful entrepreneurs, while NVIDIA is mired in supply and trade ban instability. In contrast to NVIDIA's clingy CUDA, which ties you in like a bad date, AMD's ROCm software is the genuine deal, enabling programmers to run AI anywhere. Homegrown AI developers in the UAE and open-source programmers in India adore this independence. Microsoft is talking about the affordability of ROCm with MI300X on Azure. Hugging Face also uses a lot of AI models. Although ROCm's open atmosphere is winning hearts, NVIDIA's CUDA has more fans, and its chips link faster. NVIDIA's costly empire may be challenged by startups and sovereigns thanks to AMD's reasonably priced MI300X and ROCm's open-source Spark. Of course, there is still a huge difference with NVIDIA. However, AMD only needs to be the alternative, not a clone. Additionally, AMD's more controlled exposure may be an unintended benefit as export restrictions affect NVIDIA's China business. The lesson learned? AMD has discovered the trick to being invited to the royal supper, even though it may not be the wearer of the AI crown. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. Over the last 3 months, NVIDIA's share price has increased by 59.3%. The larger computer and technology industry, which increased by 22.7% over the same time period, has been greatly surpassed by this surge. Strong investor confidence in NVIDIA's prospects was demonstrated by the stock's closing price of $180 on August 4th, just short of its most recent 52-week high of $183.30 on July 31st. NVIDIA has outperformed big semiconductor stocks, such as Broadcom AVGO, Marvell Technology MRVL, and Qualcomm QCOM, during the last 3 months. Marvell Technology, Broadcom, and Qualcomm's shares have increased by 25.5%, 5.5%, and 48.9% respectively. This outperformance demonstrates that, despite a market that is characterized by volatility due to trade disputes and geopolitical threats, investors are growing more optimistic about NVIDIA's long-term story. We think that NVIDIA's long-term outlook supports a hold position for the time being, and this momentum is based on solid fundamentals. The data center division remains NVIDIA's most potent growth engine. The division generated $39.1 billion in revenue in the first quarter of fiscal 2026, which represents an astounding 89% of the company's total sales. The rapid demand for AI is the main driver of this 73% year-over-year growth and 10% consecutive increase. In the drive to scale out AI infrastructure, cloud and business customers are quickly adopting the company's state-of-the-art Hopper 200 and Blackwell GPU platforms. Hyperscalers, who are placing significant bets on NVIDIA's GPUs to support their growing AI workloads, are responsible for a significant portion of this rise. NVIDIA keeps raising the bar with the Blackwell architecture, which promises up to 25 times higher AI inference performance than Hopper 100. As the demand for AI computing increases globally, the company's position will probably be further strengthened by the future Blackwell Ultra and Vera Rubin platforms. Despite some geopolitical setbacks, NVIDIA's financials remain rock solid. Revenues increased 69%, and non-GAAP earnings per share increased 33% in the first quarter of fiscal 2026 compared to the same period last year. NVIDIA is still optimistic about its momentum despite a $8 billion estimated revenue damage in the second quarter as a result of export restrictions on its H20 chips in China following a $2.5 billion revenue loss in the first quarter. Its second quarter revenue forecast of $45 billion is a 50% increase over the same period the previous year. Wall Street believes that this tendency will continue. Revenue is expected to expand by 52% in fiscal 2026 and 25.9% in fiscal 2027, according to the consensus estimate, while earnings are expected to grow by 42.5% and 32.2% respectively. These figures support NVIDIA's standing as a long-term growth story that endures in spite of immediate geopolitical challenges. The value score of D indicates that NVIDIA is overpaid in terms of valuation. NVIDIA's shares are trading at 36.3x in terms of future 12-month price or earnings, PE, which is higher than the industry average of 27.68x. NVIDIA is selling at a lower PE multiple than Broadcom, but a larger multiple than Marvell Technology and Qualcomm when compared to other significant semiconductor companies. The current PE multiples for Broadcom, Marvell Technology, and Qualcomm are 37.79x, 24.03x, and 12.47x, respectively. NVIDIA makes a good case for being invested due to its solid fundamentals, leading position in AI, and promising development trajectory. Holding the stock is justified by the company's operational and financial momentum, notwithstanding the increased valuation. I would shift some of my money to the semiconductor giant NVIDIA if I had to reallocate some of it today and purchase only one stock. Despite its tremendous rise in recent years, NVIDIA probably has more space to develop. Here are my reasons for believing it's a great stock to purchase and hold. 1. Regardless of who wins the AI competition, NVIDIA comes out on top. No matter who wins the race for artificial intelligence, NVIDIA stands to gain from its position, which is one of its strongest features. The AI data centers constructed by Amazon, Microsoft, Alphabet, Meta, and numerous other companies use NVIDIA's processors. These businesses are investing hundreds of billions of dollars, some of which are going toward NVIDIA's semiconductors, while they compete with one another. By 2030, an estimated $6.7 trillion will be spent on AI data centers, regardless of whether Microsoft leads the way in AI or Meta develops the extremely sophisticated AI that CEO Mark Zuckerberg claims the company is working on. For NVIDIA, it doesn't matter, because all of these businesses require the newest chips to avoid falling behind. It's not just the chips, either. The CUDA software stack from NVIDIA has emerged as the cornerstone of AI development, retaining clients and making it challenging for competitors to overtake them. NVIDIA is selling shovels and winning in this AI gold rush, regardless of who wins. The business's earnings and sales are skyrocketing. It's critical to differentiate between AI businesses that are highly profitable and those that are not. Although this is always significant in the world of investing, it is particularly significant at the moment due to the skyrocketing share prices of numerous AI businesses, both profitable and not. That may give the impression that earnings are unimportant, but they are. In fiscal 2025, NVIDIA's earnings increased 147% to $294 per share, while its revenue increased 114% to $130.5 billion. When a big, well-known company can develop so quickly, it makes sense that its share price has increased by 72% in the last year. Because of this, NVIDIA is now a wise investment rather than a speculative AI venture, and its stock is valued fairly in comparison to other AI stocks. The price-to-earnings ratio of NVIDIA's stock, for instance, is roughly 57, which is lower than the industry average of 64 and far lower than the PE multiples of competitor semiconductor companies, Advanced Micro Devices and Broadcom, which have PE ratios of 131 and 110, respectively. 3. Its economic moat is broad. Over the years, NVIDIA has made investments to create the greatest AI environment and hardware, transforming the once primarily gaming GPU firm into a major player in artificial intelligence. NVIDIA has a 70% to 95% market dominance in AI data center processors, thanks to its creation of the best CPUs and the software ecosystem that supports them. This implies that it would be extremely difficult for any of the big tech businesses to move to a competing AI semiconductor ecosystem. It is a very horrible moment to switch systems because they have already committed to utilizing NVIDIA's chips and software and are embroiled in an AI race. According to Morningstar, an investment research firm, businesses with a broad economic moat, of which NVIDIA is one of the few, are likely to enjoy a competitive edge for the next 20 years. NVIDIA now has a long-term chance to increase its sales and profits in the years to come. NVIDIA continues to be one of the most alluring long-term investments in the AI market for all of the aforementioned reasons. The company's leadership in artificial intelligence should spur more growth in the years to come, even though its stock may not rise as quickly as it has in previous years. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Greg, I mean, how high is the bar now for AMD and can it clear it?
It's a great question, and thank you for having me. We watch this market very closely. We focus on the private securities market, and obviously we're very closely watching the big, AI businesses that are still private. And AMD is clearly one of the bellwethers for this market. And obviously the recent announcements from the hyperscalers, Microsoft, Facebook, Amazon, and Google, talking about spending $300 billion going forward, to buy AI, to spend on AI is really going to drive growth in the leading chip infrastructure companies. Obviously, with NVIDIA and AMD as the number 2 player, should benefit significantly from that. And so I'm really looking forward to hearing the guidance, on the tails of what we heard from the hyperscalers to see, how they feel about the growth potential. I assume it's going to be great. Obviously, the stock has responded extremely well this year. There's some headwinds clearly with some unknowns, tariff situations with China that they obviously had the ban recently, on their AI GPU accelerator chips in China. So that's going to have an impact on Q2. That ban has been paused, but there's still some uncertainty around how tariffs are going to affect margins going forward. So there's really a lot to listen to today. And, it really gets into what the broader AI narrative will be going forward.